Hello guys, welcome to my YouTube channel. First things first, I'm going to wish you a happy new year. It's the 4th day of the year. Yeah, if you're serious about precision, discipline and consistency in the markets, you're in the right place. Yeah, today I'm going to do a weekly pre-market analysis where I'm going to break down my weekly bias. Yeah, there's no hype, no signals, it's just logic, preparation and executions when time aligns with price. So let's align our bias, manage our risk and trade this week with clarity and purpose. So we are going to go directly to the yearly. So it's a new year. You can see that last year's candle did a close, and it was strongly bullish. We had a very bullish year. So on the 6 months time frame, we can see that price did also close bullish. On the 3 months time frame also, price closed bullish. On the monthly time frame, we can see that what did price do? This was our last swing point. We had this trading range, so we are trading within this range. We are trading within this range on the monthly. So that range high and that range low, although on this high we didn't have a full body close, so we can expect, we are not going to wonder if we see price coming to sweep the low of this candle to collect sufficient liquidity so that it can trade and come to break this high here. But on the 3 months, on the 12 months, 6 months, 3 months, we have seen that price was strongly bullish. On the 3 months, we have spotted that price might come below this low. Let's go on the weekly. So on the weekly, the last area of liquidity that we had on the weekly. So on the weekly, we can see that we had a full body closure. We had a full body closure on the weekly, and on the weekly also we can see that price came to that hidden liquidity right there. We can see that price came, rejected, and that came and rejected on that hidden liquidity. But also on the same time, we can see the nature of close. Price did a full body closure. On below the last volume candle up. So on the weekly, we can also do some analysis and see the areas where price had left some fresh zones which were unmitigated. So we can see that this area was unmitigated, and before that we can see that we had an area right there. We had that area. We can see that price did not mitigate that area. So on the weekly, even you can anticipate, if we are bearish, we can anticipate for price to come and enter inside these areas before buying. But on the daily, when you come to the daily time frame, you can see that we were on the double area. We were on a double area on the daily time frame. So you can see we had this first area here, and we had this second area here. So it was a double area. We can see that price has been trading within the area below, and we're going to see the reactions on the lower time, on the specific liquidation or time frames. So we have also seen that these areas on the weekly, they are very fresh. And we can anticipate price to come back to these areas if we are going to be bearish. But in the long run, I'm very bullish, because on the yearly we are bullish, on the 6 months we are bullish, on the 3 months we are bullish, but we have some red flags on the monthly time frame and the weekly. So what are we going to do? We are going to react when price aligns with time. We are going to react when price aligns with the time. If price aligns with the time and we are inside this area or we are around this area, we are buying. If price breaks this area, we are going to sell to the next area of liquidity before looking for shifts that are shift of market structure that is going to help us to buy. But my overall bias in the meanwhile is bullish. So on the daily time frame, you can see that we have that double area. Let me first delete this analysis. We have a lot of things. So on the daily time frame, you can see that we have that double area that we had that we had marked. We have that double area, and I want us to look at the nature of candles on the inside this double area. We can see that price came printed a low. After price printing a low, we can see that Friday's candle. On Thursday we had the holiday, the start of the year on 1st. It was on a holiday, that's why this candle looks like this. The market was closed. So on Friday we can see that price bought, but it lacked sufficient liquidity to close above the last swing point that we have. You can see when we use a line chart, we can see that this is the last swing point that we were having on the daily, meaning that this week we can anticipate first for price to come and trade below the last bullish this bullish candle right here, so that we can get some sufficient liquidity to come and close above the last swing point if we are bullish. So let's go to the 4 hours time frame. So whatever that we were doing is on the daily. So we are saying on the daily, if you are buying, we anticipate price first to sweep the low of Friday, so that we can buy. So let us go to the 4 hours time frame. So on the 4 hours time frame, we can see the last swing point that we are having. We can see that price had that low. Price lacked sufficient liquidity to come and take out that low. We can see the last swing point that we had, this one. Price came and closed above the last bullish candle. We said a bearish candle can never print a high. That's why when you put a line chart, you can see that the line chart was on the bullish candle. Let me use the wicks. Was on the bullish candle. So, and when I come to look at the nature of these candles right here, I can see that on these swing points, I can see that we had these areas right here. This one was the last internal high that we are having. We can see that this first bullish candle came, tried to break that area, but lacked sufficient liquidity to break that area. Price came back, but it did not manage to sweep the low of that candle. It did not manage to sweep the low of. Price came back and did not manage. This one was the low of the day of daily, which we are anticipating to be taken out. So we can see that price did not have sufficient. Price did not sweep the low of this candle when it tested back. Then it came, then closed above the last bullish candle here, confirming that we are strongly bullish. So this week starting tomorrow on Monday, I'm going to be looking at these areas, these lows, and how price will take out these lows, so that I can know whether I'm going to buy, so that I can make my decision whether I'm going to buy, price to come and take out those highs. So my work is to react when price aligns with time. So I'm not going to react anyhow. Yeah, so that is my weekly anticipation. That is what I'm anticipating this week. So it was on the specific liquidation time frame. We can see that last week I took a trade right here. We had this hidden liquidity right here. I took a 7-hour trade. took a 7-hour trade right there. On Wednesday, it was on Wednesday, took a trade right there on Wednesday. There, it was a 7-hour trade and closed it here. You would have even secured 10-hour that trade if you wanted, but I secured around 7-hour. I secured around 7-hour on that trade, like that. So my anticipation tomorrow on Monday, I'm going to press buttons if price comes to sweep these lows, and if price sweeps these lows and I see a shift on the liquidity refinement time frames, which are below 1 hour. So if you're new to the channel, consider subscribing to the channel. Yeah, so let us get to 1,000 subscribers this year. Yeah, my goal this year is to grow in terms of trading, yeah, and in terms of YouTube, and help even my community members who are in this YouTube channel to grow with me as I do the same. So if you're new to the channel, consider subscribing, liking the video, and if you have a question, you can drop it on the comment section so that I can do a video of it. So thank you for your time.